Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
So, Scott, you've got Justin Caldbeck on DGV, and he's got a big, broad international approach. So he's got investors and family offices and venture partners that he's working with from all over.
Yeah, he's been with some of the largest firms in the history of venture capital. And because of that, he brings that large VC connections and access to deal flow and access to capital. But now with his current firm, he can use all those resources, but be a little more personal one-on-one, with the interaction with both his LPs and both the entrepreneurs he invests in.
Well, and I think it's really great for founders and other investors to be exposed to someone who's got experience with companies and investments in like LinkedIn, Stitch Fix, Grubhub, Snapchat. You're not talking about, everyone seems to have, the same list of, I'm going to call it like B investments, which are slightly
Right.
below that. But these are giant ones. And McKinsey, Bain Capital, the Consumer Tech Fund and his current seed fund has deep industry expertise here.
Yeah, he has been, like you said, involved in some of the largest, most successful companies, in the history of venture. And he really has that experience, as I mentioned before. And I think when you make an investment with someone with his background, you get some real expertise. Because a lot of times, entrepreneurs, they breathe a sigh of relief when they get to their seed or Series A fund, but what happens next? And you need to have someone who can quarterback, the subsequent rounds. And I think that's really, what he brings to the table.
Well, yeah. And I was thinking about this. I think so often we ask for, as a founder, we ask for strategic investors, right? Like that's what we're really out there looking for.
Right.
But so often we don't always understand what that means. But when that means that he can tap into these great companies and recruit some people for you, like that's a really big deal right now. You've got a much more collaborative investment partner.
Well, you just imagine if your investor has, the founder of LinkedIn on, speed dial, to date myself. But the reality is those are the kind of relationships he has because of the experience he's developed over time.
Well, he's going to tell us a little bit about DGV. He's kind of real quiet about it, and I love that. There's no website on on the blog for this episode. He didn't want to share it, which I think is great, but he did give us a connection point to his LinkedIn. But DGV is particularly interested in consumer tech marketplaces and identifying global opportunities based on successful models from other regions. And they provide not only capital, recruitment support, strategic advice, and mentorship to all of their portfolio companies. So that's a really unique thing. So let's hear from Justin Caldbeck all about DGV and his mission in the emerging managers world.
Well, welcome, everybody. My name is Scott Kelly, with the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm honored to welcome an old friend of mine, Justin Caldbeck. Justin, welcome to the show.
Thank you, Scott. Thanks so much for having me. I'm excited to be here.
So Justin, what I want to try to do today, we're going to get to what you're doing, now in the VC investing space. But I'd love to get a little backgrounder, about what you did prior to your current fund and currently what you're doing now, and professionally and personally, tell us a little about your background.
Sure. So I'll give you kind of my full background. So born and raised in Vermont, grew up in a little town, Shelburne, Vermont. Went down to Duke for undergrad, played basketball there. Started my career professionally at McKinsey right out of Duke. And that's really where I first fell in love with technology. I mean, I had no exposure to it before, but started to serve tech clients and realized I loved that industry. I didn't like consulting as much. So I went up to Harvard for business school, technically came back to McKinsey for a year and a day to pay off my loans. And then I started investing. I got recruited up to Bain Capital Ventures.
Mm-hmm.
So I was an analyst initially there, worked up to be a partner there, initially in Boston. And I actually moved out alone in 2008 to open up their West Coast office. So I worked on the early investment in LinkedIn there. I ended up hatching a company. So I had a thesis around productizing SEO at the time, brought two founders together, funded it. It's called Bloomreach. It's now about a $2.5 billion company. And then I got recruited over by Lightspeed to go co-lead their consumer tech group. So prior to my joining, they had not had a lot of extraordinary firm, lots of success on the enterprise and infrastructure level, but not a lot of success on the consumer side. When I joined, I ended up leading the early investments in Stitch Fix, sat on the board, took it public, ended up leading the early investment in Grubhub, sat on the board, it went public. TaskRabbit, I was number 2 on the seed investments there in Snapchat and Affirm. And then, I also kind of was doing a lot of personal investing in cases where couldn't get Lightspeed to go ahead and get involved. And so ended up doing personal investments in Opendoor, Uber, SpaceX, Collective Health, a number of other companies. I left in 14 to go start a fund all around consumer tech. So a partner and I raised about $300 million for that. That fund's done very well returns-wise. Really excited about where that'll end up from a returns perspective. But I left in 17. I took a couple years off with the family, and I realized like this is what I love to do, and so it's what I love to do. And so set up a family office with my wife. We started making a bunch of personal investments. So first investor in Whatnot, which is now about a $5 billion live stream shopping company. First investor in Eightfold AI, which is a couple $1 billion AI HR platform company. And then, about in early 2021, I got approached by a multifamily office in Europe, and they knew about my background and asked me if I would be open to taking an anchor check from them and doing a seed fund. And I got to know them over about 6 months and got really excited about it. So started a seed fund I called it DGV, which was just a placeholder name. D was short for the firm's name, and have been doing that since 2021.
Well, I mean, that's an amazing track record. I think probably the only thing I'm more excited about in your investments are the great artwork you have behind you from your kids. So congratulations on that too. So
Thank
talk a
you.
little bit more about the fund thesis. Obviously, you've had prolific background in some legendary companies. So talk about what you're doing now specifically.
Yeah.
What stage, check size, and where you play in the ecosystem.
So I love it. So my entire career had been at Bain Capital, at Lightspeed, and at Binary. My entire career had been leading Series A investments, sometimes seed investments, but leading, right? And as you know, the bar to lead is a much higher bar than to participate, right? So I was going head to head with Sequoia or General Catalyst, or when I was at Binary Lightspeed or other tier 1 firms, and I loved it. But the bar is higher, right? You're really trying to earn the right to be their sole board member for that round in a lot of cases. Super proud of the work I did there. But at this firm, I've taken a different approach, which is in 2 ways. One, we're not leading. We're just participating, right? So we work with other groups. We're very collaborative with a number of other funds. I'm personally an LP in about almost 20 funds. And so, good network of funds we work closely with. And then secondly, I've taken a really a more of a geographically agnostic stance. So just over 50% of our investments are here in the US, but we have some really exciting companies internationally as well. So we've got some great companies in Europe, in South America, in Africa. We're, in the leading food delivery company in Africa. If you look in Southeast Asia, we're in Honest Bank, which is the new bank of Southeast Asia, growing very, very quickly, and a number of other great companies there. We've got some investments in China. So we've got a really, I think a fantastic portfolio of companies, and it's been working, right? If you look at, so we're 2021 vintage, Scott, and if you look at, the median marks for 2021 vintage funds, it's at basically flat. It's a 1.0. We're at almost 1.8x right now. We have already distributed some capital, so we've got DPI, and I think it's actually undermarked in the sense that we're still actually deploying from the fund. We've been slower to deploy, but feel really good about that. So again, our check sizes are, we'll go as small as 100K up to $750,000 or $1 million. And we will really look anywhere, which has been helped by a scout network we've developed.
That's awesome, and that was really I'm glad you brought that up in terms of returns and such, 'cause the whole genesis of putting together this podcast was an article that I saw at the end of last year was, there was 18 funds, venture capital funds were getting roughly 78% of all the LP capital invested, and there's 3,200 venture capital funds at the end
Yeah.
of last year, and 1,800 of them were fund one, so I'm glad you brought that up. So, in this environment where you've got these monolithic funds, several you've been a part of, why your fund versus them, and why right now?
Well, look, I think it comes down. I mean, I'm saying it's a little bit tongue in cheek, but I mean it. It's like, do you care about returns or do you care about the brand of the firm, right? Like, so when I'm an LP in funds, I have no interest in investing in these massive monolithic funds, right? With the exception of maybe two or three. Like I think Founders Fund is a world-class fund still. I think Sequoia is a world-class fund still. I think Benchmark is a world-class fund still. In those cases too, they in some cases haven't optimized for how much capital they've raised. They continue to be, I just think, world-class from a returns perspective. But it's not true for most of the big funds, right? And I've been a part of those funds. I have seen the evolution of funds from we care first and foremost about optimizing returns, right? To we care first and foremost around capital raising, right? I totally understand the motivations behind it of wanting to raise lots of capital and generating massive fees, right? And look, for many, 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 this is true for all types of people, but when you've made a lot of money, your motivations for grinding for the next deal can decrease, right? And so I've seen that too, right, among my partners, right? Guys spending half the summer in Hawaii and other things, right? And so I get why a lot of LPs, particularly institutional LPs, choose to invest in those funds, right? The Andreessens of the world, NEAs of the world, et cetera. Because you don't get fired if you're sitting at, North Carolina, endowment, you don't get fired for putting money in those groups. But the reality is those groups are index funds. They don't have the alpha that I believe you should be able to generate in early stage venture capital, right?
Right.
And so that's where my focus is, right? When I was at my last fund, we capped our fundraising well south of where we could have raised it because we didn't believe in the idea of just optimizing for fundraising, right?
Mhm.
And so that's, I think, the core trade-off you make between betting on an early, fund one, fund two, maybe fund three, where there's still a lot of that grit and drive, et cetera, but behind a manager that has, proven themselves, right, him or herself as an
Yeah.
angel in other ways, versus investing in fund 10, multi-billion dollar kind of, index fund.
Absolutely, and, that's the reason why we set this up, because the reality is, at the end of the day, we're finding a lot of folks want to get in venture, high net worth individuals, not just the major institutions. And the RIAs and advisors that are independent want to get better than an ETF return for a portion of their client's portfolio, or their overall portfolio. So, yeah, I appreciate your thesis of going for a return versus fundraising. So, well, let's talk about a little about industry. So you talked obviously geographically that you're investing in United States and Africa and other parts of the world. What industries are you looking at now? Obviously, AI is kind of the .com of this era. But what are you looking at in terms of industry, and where you think the next things are going to be?
Well, look, I spent a lot of time in consumer tech, right? That has been my career from, for the last multiple decades, right? Early in Grubhub food delivery, early in Stitch Fix, Uber, Open Door, LinkedIn, more recently, whatnot, right? Like for many years, I've been getting the question, aren't we done with consumer, right? Is there anything else? And I just
Right.
find it so laughable because in every industry, there's so much room for continued improvement and optimization, right? And I look at Whatnot, right? Whatnot is a company, for those of your viewers that aren't familiar, they do live stream shopping. What does that mean? Today, if I want to go sell, or historically, if I wanted to go sell a product, right? If I wanted to sell this drink, or a sports card, on eBay, I would take a picture of it, I would write a description, and I would either put a buy it now price or I'd start an auction, right? That would be what I do. Well, in China, You've seen this company, Taobao Live and other platforms that allow you to click a button and go on live, and to all of the people that are watching you synchronously, and describe it, right? What's the provenance of this bottle, right? What is it made of? How rare is it? Let me story tell around what it is. And in real time, have people bidding on it, asking questions, and the ability to buy it and pay for it in real time, right? It's almost like a QVC, a mobile version of QVC with a distributed set of hosts, right? And so that was when I first invested, they weren't even doing it yet. I talked to them a lot about doing it. I encouraged them to do it, and they've been doing it ever since. But that's a great example of an industry that didn't exist in the US when I invested, right? And they have grown massively, right? They've announced they did over $3 billion of sales last year. But I am constantly, I just did one, several months ago in the kind of addiction recovery space. I think a really new approach to helping lots of folks in the US initially, but globally over time, kind of manage their challenges around addiction. But there are lots of spaces where there are new experiences to be created. But what I get excited about is not only those new experiences in the US that I'm keeping my eyes out for, is taking models that have worked in China or in the US and helping disseminate them to the rest of the world. Finding world-class entrepreneurs in other parts of the globe, helping to either steer them, guide them, finance them around models that I know work and I know well, and build those equivalent companies in other parts of the world. And you see it, right? You see the Kareems of the world taking the Uber model. You see companies in other parts of the world taking DoorDash, Grubhub type models. And so that's what I've been doing as well. Obviously in AI, I see lots of opportunities there. We've done some recent investing, in terms of the application layer there as well. But consumer and consumer tech marketplaces are where I still spend a lot of my time. And I still think there are lots of opportunities.
So I'm going to ask one more question in perspective to a potential entrepreneur reaching out to you, and then I'm going to talk about potential LPs. So you touched on this a little bit, obviously helping them in other areas. So obviously you've got a broad background in consumer tech.
Yep.
So when someone comes into your portfolio, what else do they get with you and your fund in addition to the cap?
Oh man, I'm gonna roll up my sleeves and look, I really believe I'm gonna help increase the odds for their success. The best entrepreneurs don't need any investors. That's the reality. But I believe that as an investor, you can always help, particularly in a couple different ways. First and foremost, recruiting. Like I love to recruit, right? If I look at, Stitch Fix is a great example. I invested in that company. It was a seed investment. I alone cold reached out to and recruited in the head of all of data science from Netflix, Eric Colson, the COO of Walmart.com, Mike Smith, the head of online for Sephora, Julie Bornstein, the head of engineering from OPower, and multiple data scientists and engineers. With Whatnot, I had a similar run where I recruited a number of their senior execs, right? I am right now for one of my security companies. I've just made multiple intros to head of marketing and head of sales candidates for them, right? And so I love when I have conviction in a company and I believe I've backed an entrepreneur who can close great candidates around a theme and around momentum in an opportunity that I think is really big. I love helping to find them great people and helping to recruit those people for them. And I think that no matter how great an entrepreneur you are, that helps because you're bandwidth constrained, right? You are operating your business. You don't have time to go out and find 25 candidates for this role that's super important. And so I have found that to be super important and effective in all my companies. But look, I think there are other ways that other entrepreneurs want help, right? Whether it's fundraising, it's, how to put together a deck, it's a thought partner around, go to market or whatever it is. I've had a lot of experiences working with companies from the very, very earliest stages through exit, right? And through IPOs. And so I don't think you'll find an entrepreneur of mine that I've ever worked with who says Justin's unavailable. Like when they want my time, they've got my time. And so I work really hard to try to be their first call and their best partner.
That's awesome. And that's really important, I think, obviously, because at the end of the day, entrepreneurs, They may need money, but they need good advice too. And probably in more cases than not, they need that first and only. Now, I want to pivot. Let's talk about the LPs and the investors that you have and who is the profile of an investor, because we're working with a lot of high net worth individuals that want to get in the venture, don't know how to do it. They're going to try to do individual investments on their own, and unless they're connected, they're going to fail miserably. And then you've got advisors who are looking to increase the returns for their client portfolio. So, why don't you share first the profile of your some of your current LPs, and then what you're looking for in LPs going forward?
Yeah, I mean, my current LP, it's a pretty wide variety of groups, but I've got family offices and high net worth individuals, obviously here in the US, but throughout Europe. I've got some in in Dubai. I've got some in Asia. So a pretty wide group, but a number here in the US. And I think the typical profile, look, my favorite profile, and what has led to kind of the typical profile is folks that have an interest in technology and the private markets, right? Doesn't mean they know a lot about it, but they have an interest in it and generally want to understand like how I think about investing and how I think about firm building over time. I think it's a massive mistake for family offices or individuals to try to do private markets investing on their own. That's my belief, right? In this same way, if I have an interest in distressed debt, it's probably not smart for me to try to go out and start to like bid on that and look for those opportunities myself. I should find a world-class, firm that has been doing that for a while and has demonstrated a track record of being able to do it effectively, because there's too many smart people trying to do it. And if you're a family office or high net worth, you're going to have an adverse selection issue in terms of what you see. You're not going to see the best stuff. Even if you do see it, you're not going to win the best stuff, right? And you're going to, have all sorts of issues around pricing and everything else. And so, so I found the folks that I think have been the best partners, they have an interest, they want to invest in a fund, they have an interest in hearing about the kinds of stuff I'm investing in. And I found it's a great, I can think of two of my LPs in particular, like who want to learn about it. And over time, they do want to do more direct investing.
Right.
And so what they've done is like, I spend time with them every month and a half and like dive into the portfolio. What's interesting? Like, do you want to talk to some of these companies? Right. And I found that to be really effective for a couple of the LPs. But yeah, I think generally like you're interested in early stage tech. You understand why I think it's as good an asset class as there is, given all the macro kind of tailwinds around it. You want exposure to it. You might want to learn more about it. And I think those are the LPs that I found to be the best matches.
Awesome. Well, what else do you want to share? Any final thoughts or anything you want to share to the listeners today?
No, I mean, I think, look, if there are folks, first of all, any entrepreneur that is watching that is creating something kind of transformational or generational, obviously I would love to talk to them, and feel free to reach out. And then look on the LP or RIA side, if folks want to learn more and they want to understand kind of either dive deeper into my track record and history or kind of my motivations for starting this firm or the existing portfolio that we've got or kind of how I think about the world, I'd love it. Like I love talking about the companies that I've backed and my strategy. Look, I'm really proud of my track record over the last 2 decades, right? I'm not very self-promotional. I don't do a lot of these kind of things, right? Like we've been friends for a while and you've been great to me, but I intentionally don't do a lot of podcasts or blogs or anything like that. I just love backing world-class companies. And so would love to talk to folks offline if there's interest, for sure.
So for those folks who do want to talk offline, how can they get in contact with you? Where should they go?
So you can find me on LinkedIn, right? Justin Caldbeck, or you're feel free to shoot me an email at jcaldbeck@gmail.com, and I think either one of those is a great place, and certainly reference you, Scott, in terms of where you found me. But I think that's a great place to reach out. And if you have trouble finding one of those mechanisms, obviously, feel free to go through you as well.
Fantastic. Well, Justin, thanks for being on the show. I appreciate that. Thank you again.
Thank you, Scott. Really enjoyed it.
Scott, I had to use my, Google, which usually is like Gemini. You end up with AI when you get the Google things nowadays. But I've never heard the term monolithic fund before, and before today. Like that was, and it made total sense when I looked up the definition of it, but I didn't really think about what that means, though. How does that monolithic fund, is it good? Is it bad nowadays? Is it, is it just what you need?
It's interesting because, venture is in a bit of a transition mode right now. And I think, honestly, I'm glad that our podcast is coming out when it is because, venture and these monolithic funds are, in some cases, in recent news, are at a crossroads on that being the model, or if it's the right model, or is it the next model? And I think, obviously, they provide value in the ecosystem, but sometimes it's easier to turn a sailboat than it is a Titanic.
Well, what I thought was really interesting about this idea that the monolithic funds, I mean, that their focus is on the returns and the capital raising side of things. When you don't have to worry about that and your investment fund is worrying about that for you, that makes it a little easier, honestly, to really concentrate on making sure that you're increasing your profits and you're doing the things that are necessary to grow the business to the stages. So I actually do think, from a founder's perspective, that that's actually really great partnership for the right level company. Obviously, you got to be at the right level for that. I thought it was his perspective on AI was really interesting when we're talking about that. He was looking at application layer opportunities across the consumer tech and focusing more on the consumer side, where I hear from a lot of people focusing more on the industry or business side of AI applications. So I thought that was really interesting. They're still interested in that consumer tech marketplace focus for AI.
I think obviously although AI has been around for a while, it's gotten a lot of press in the last couple of years and even the last few months. And much like the internet, you're getting that shift from, big players and LLM models and the back end to really how it's going to be applied in the world. And consumers are going to be the biggest consumers of this technology. Despite the fact that you're going to have major data centers and chip manufacturing and all those other things, how AI can affect consumer behavior, consumer purchases, and their decisions and their engagement is going to be huge. And at the end of the day, I think he is touching on something that is just starting to become prevalent. The average person is sure using a little bit of Gemini or some Chat GPT, but once AI plays into their entire consumer experience, Justin will already have those investments in hand.
Yeah, exactly. They'll all be taken care of. I also thought it was really interesting when he started talking about his limited partner approach, his LP approach, and family offices, high net worth individuals, lending partner. That's pretty broad. Like that's a lot of languages to speak if you want to think of it that way. For
True,
him.
and I think because of his experience and background with some of these legendary funds, he understands how to engage with a family office as an investor, or an RIA that is representing high net worth individuals or high net worth individuals themselves. So I think when you have the experience and the track record, a lot of people are going to come to your door, and he needs to be able, and he has the background to communicate at all those levels.
But my favorite thing that he said in the whole interview was that the best entrepreneurs don't need any investors.
I
It's
agree
a
a
really
100%.
interesting thing.
And honestly, I'm so glad he said that, and I was in complete agreement because the reality is 99.8% of founders won't get venture capital and are probably better off not getting venture capital. There are countless stories about companies grew tremendously with no outside capital. And it's even happening now. The trend now is to do what's called C scaling. Basically, they just take a small amount of money just to get started because raising money is such a difficult proposition. And I think build a company and the business and the income and revenue.
I agree. I agree. I'm all about that. I mean, we used to call it bootstrapping, but the reality is it creates a lot more innovation at the end of the day because you have to figure out how to make things work with what you got. And that makes some pretty resilient entrepreneurs. So then when they do go to the bigger rounds later, they're ready for it. So I know I was really so impressed with Justin Caldbeck. DGV, really fascinating to me. And I can't wait for the next ones you keep bringing up here. You've got great connections, Scott. I don't know how you do it, but you've been traveling all over the place. Tell us a little bit about the kinds of events you've been doing lately.
Yeah, we're heading to. I'll be heading to Austin, Texas next week. We're taking one of our portfolio companies on a road show to meet with investors around the country. We'll be in Austin, Miami, California. We're launching a new series of events called Investors and Innovators, where they're not necessarily pitch events; they're just high-profile opportunities to people to connect. And we did one in Tampa Bay, my hometown here, and went very well. And we're taking that on the road, and I'm pretty excited about it.
And you and I are going to see each other soon because you're going to be out in California
Coming to California,
at an
absolutely.
Expert Dojo event, so in Santa Monica. So we will see each other live in person there too.
Exactly.
So you all have to check out the website, emergingmanagerspodcast.com, and make sure, because we've always got links to the latest events and the latest things going on for VC Fast Pitch and for Black Dog Ventures.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guest next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.